All right, well, let's get started here. Hello, everybody. Welcome to the January 2026 Box webinar. And we're just kicking off the year here. And man, what some fireworks in the markets. We're going to get to that in a few minutes here. So first of all, introduce ourselves. My name is Scott Ebeling. I'm head of energy strategy and client solutions here at Box. And with me is Ellie Black, a certified energy procurement and manager of pricing in our strategic solutions team. It's always a tongue twister for me. And today we're going to talk about Box, give a little market update, and then we're going to have a discussion about turning market noise into confident conversations, and then some closing thoughts. My typo there, that's my mistake. And we'll take it away, Allie.
Awesome, thank you, Scott. Good morning, everybody. Thank you for making some time to share with us your Wednesday morning. Just wanted to take a quick minute to introduce Broker Online Exchange for those of you who are new or maybe not partnering with Box yet. Box, or Broker Online Exchange, is your ultimate commercial energy partner. We provide independent energy brokers and affiliates with access to all top electricity and natural gas suppliers, pricing, and cutting-edge software in all deregulated energy markets across North America. You can see where you can scale your business here. With our deregulated energy map, you'll see some natural gas markets only in green, some power and gas markets in blue, and you'll see some areas across the West and Midwest that are that kind of grayed color. Those are limited markets. The lower 48 is deregulated for gas, so those are some limited natural gas markets that we have there. On our next slide, you'll see some of our supplier partners, our big ones. You'll see lots of names that you do recognize, Constellation, let me see, Constellation, Vistra, FreePoint, Champion Energy Services. So we work with many energy suppliers, and happy to put those relationships to work for you. We know that large suppliers specifically can be a little bit picky in terms of the channel partners that they do business with. And Box represents a huge channel to each of these guys. So really excited, happy to go to work for you guys and help flesh out the portfolio. And then just to take a look here, our Box Strategic Solutions team, this is the team that Scott and I have built and head up. We are happy to go to work for you. Really, our goal is to make sure that you guys go into your conversations with your customers with tailored sales strategies, data-driven insights. You guys know how to pivot, you know how to have these conversations. You're confident approaching your customer with a consultative mindset, listening to what their goals are, and providing options and solutions that could really help them with their problems, whether that is an energy supply, typical energy supply contract that's just fixed all in, some set it and forget it, or whether it's a strategy that takes a little bit more active management. That's really where we come in, and customers who are looking to actively manage their energy as rising costs start to hit us are really going to be a sweet spot. We'll talk a little bit more about the value that you can bring as an energy advisor and as an energy broker later in the webinar. But I know we have had some market developments. It's been absolutely crazy this week, so I'll pass it back to Scott so we can find out what is going on with the market today this week.
It sure has, yeah. I mean, I had to, you know, typically we're able to like kind of take these numbers we get from like a couple days before and come in and like that. There's not much change, and we can just talk about and sort of those numbers up there, just preparations. You know, it's like I can't like. Today I was updating this, you know, up to an hour ago, some of the slides just to show you guys, because just this crazy market over the last couple of days. And first, I'm just going to show you this. This is the slide we originally had up. This is like Friday's close, and you'll see here all these monthly changes. Pretty much all these monthly changes are pretty much have evaporated. So don't take this as the pricing right now. This is year 2027 pricing, by the way. We switched from 2026 because we're looking forward out. Not in this current year. People are now contracting more in 27 than anything else. So, but you'll see this moving here, and we're not going to talk about this too much in some of these charts, but we do want to talk about this. This is what happened. This is what happened over the weekend, and we talk about it all the time. risk happens quick. This market's all about weather right now, all about weather. Everything is about weather. If customers waiting, they're basically trading the weather. They're making bets on the weather. You can also go do that in poly markets, by the way, and other gambling sites. I'm not endorsing that by any means, but you can go and do that if you want to. This is not, you don't start trading and gambling with treasury markets or your treasury or your financials of your company. And we'll get into this in a second some more. But this is what happened. This was basically pretty normal. It was pretty normal, slightly below, and then bam, over like a 3 4 day period, which happened to be the weekend, everything just went cold, really cold. And this area here is really what you pay attention to, because this is the population area. This is where a large part of the population, a large part of this is heated by natural gas. And now we have, this next slide. This is what happens here. I'm going to show you first. Here's the storage chart. Here's what it's up to date. This is where we're at right now. Like, cool. And this is what Darko's looking at going into the weekend. Like, wow, look at this. We are pretty much on 2024 numbers. We're above last year. We've had some really warm kind of January so far. It looks relatively mild. Yes, there's going to be a slight little colder temperatures coming the next 2 3 weeks, but then this happened, and this is what basically now is the forecast based off of the weather forecast. We pretty much know what it's going to be, what this storage number is going to be the next 2 weeks, and this is kind of forecasting out the week of and what the cold is, and we've now starting to this complete different trajectory here, and going to get more in line with really 2025 numbers here, and some of these other numbers, and we can't guarantee what's going to happen in February or March. Again, we're basing on the weather, and the market did too. And it caught some shorts off guard. So what happened here is it caught the market. There's a lot of hedging, a lot of speculators out there, hedge funds that were short gas, especially in the front of the market. And now comes a roost. This is one of the biggest 2-day percentage gains I've ever seen in the market. And granted, I'd be more gradual with like a 3 or 4 day if it was this all happened and the changes happened more on a Monday or Tuesday. But this is a huge change. So yes, we had a big rip up, but 70, 80 cents on Monday or Tuesday, yesterday, and then we have another this morning. It's up here again. In fact, I think we're now there at 480 here. But you can see as well that in February 2027, natural gas, this is February 26th, this is next month. This is what the CNBC price is showing. Oh, 20%, oh, 20%. And here in February 27, gas, this is not really moving as much. We're kind of like back to where we were a month before. Yes, it moved. It is still significant. It's 40 cents. This is really where people are buying. This is what should be paid attention to. And this is where we should tell our customers really to pay attention to is this one. They don't show next year gas in there or the 12-month strip. They show next month. It kills me. That's why I don't watch CNBC. But this is what they show. So be aware of that. And just, but this is what the customers are hearing as well. So you gotta like come in and educate the customers, and that's one way to educate them. And here's another way to educate them. This is for larger customers. Layered purchasing, we talk about all the time. Just a different example here. The layered purchasing works. It's the best way to go. It eliminates FOMO. It eliminates heartburn. It eliminates, losing hair, and eliminates you losing your job if you're the one put in charge, the external energy manager put in charge of managing this procurement, right? So, and here's an example of really for 2026 power in PGM of a hedges that we time throughout, and these seasonal kind of disciplined hedge strategy that we have. These were the purchases we made in the springs and the falls, or late summers, late winters, for the customers in PGM. And with this, you'll see that as we were making these 8 purchases, 12.5% each time to get to 100%, we basically average with that 49.44 versus a 51.57 median. This is energy only at PGM. This is, so with that, $2 lower than what you've done if you just picked any random day in here and decided to hedge. But it eliminates all this like, oh my God, what do I do here? What do I do here? What do I do here? Oh, is it gonna go lower? No, people don't time these right? Yes, you could time these down here, time here, but the best way to almost assure that you are not going to get these blowout prices like here, like we have had customers that we've talked to that are customers before, but that kind of we're getting around to it. They were kind of panicking, like, oh, okay, yeah, I haven't done anything yet. It's a month to 2026. What do I do? And like, well, it's a month to go. This thing could go even higher. And they ended up hedging at these even the highest point right here. So layered hedging works, layered purchasing, it works. We are experts at this. I've been doing this for 20 years. So, and managing portfolios and very large portfolios on the same metrics. So get with us. If you see this, you have customers in this, we'd love to put them on this. We have many large customers on this, and they are extremely happy. And best of all, those customers, they never have to talk about renewal, because 3 years out, you're just putting another year on, because you're gonna start hedging that next year. And it's not even a question of, do you want to renew, or let's go look at new contracts, just continuing with the same program. All right, so I'll get off the soapbox and layered hedging. You see it again. Here's all these charts here, and these prices are all up through end of Friday. So these kind of all ticked back up to some other levels here, and you'll see we've had a nice drop there, but then it came up. Again, here's a monthly index for in January. This is up month to date. This is probably going to be up to here by end of the month, the way it's going. We're going through these real quick. Okay, so PGM summer peak load forecast drop. This is some big news, and it did bring down markets a little bit. They did drop their load forecast for summer peak for this year, 26, 27, 28, 29. And it was quite obvious. We've been preaching about this for a year or so, that we think they're way over their skis on how much their demand increase is going to be. Do we think we can get these kind of levels? Possibly. I think this is a little bit more aligned with our levels. There just is not the resources to build out this generation. We're going to be putting out some stuff on this probably in the next week or two here, or some 2026 kind of outlook and predictions. And one of them is that, the spoiler alert, one of them is that we think that this race to be the AI country in the US, realization is going to come to it. Plus, there's going to be some headways with this big political issue as well. And we're going to have some other solutions, because it just is not the resource. It's 5 years right now to get a natural gas generation built, if you want to. Nuclear, that's 10 years in, and that's still counting. We've 2 years now, we've been saying, like, we need more nuclear. I've seen one plant get even discussed and kind of like approved right now. That's 10 years away. So moving on, capacity results. We had these capacity results just came out just after our last update. 333 is the number. So a slight increase from 6.7. That was also the ceiling. So 333.44, or another way to look at it and tell customers is $121,000 per every megawatt of capacity tag. So if they have a 500 kW capacity tag, it's half of that, around 60,000 a year they pay. Divide their usage into that, say it's 3,000 and the 60,000 and of their annual usage, and they're paying $20 a megawatt hour for capacity versus up until this past May, it was they were paying roughly around 2. So you'll see that's what customers are talking about, and prices have increased. Reserve margin came to 14.8% versus 20% target. This would have cleared 530 megawatt hour a day. So they're $200 higher if it was, or about 60% higher if it was there was no ceiling. So so clearing at this level here definitely is not good for reserve margins. Puts a bullish tone on forward prices for 27 and beyond. Really gives a durable floor here for the markets. So where there's buying opportunity, definitely sees it. ERCOT, this is enough, and we put this in a 2-year chart to take that one big August number off, and this now just shows, like, over the last 2 years, we have 1 month above 40, and then one more month above 36. So and we're averaging 29, 27, yet the forwards are in the 50s, although they've come off, and we love to see this, because we kind of thought this. We think it's kind of reaching a good value. We think the good value here is in the like 46, 45, 47 range. And the market's kind of getting down there to those levels. New England, again, these prices have gone up and gone up quite a bit, probably for a little bit here. And then the forwards are doing 26. Remember, New England's on an island. They're on an island here in a way for natural gas. They have to compete with Europe for natural gas when there's really cold out, and they need to basically import it off instead of pipelines coming from ourselves. New York, Massachusetts, they're green, and they instead choose to burn heating oil in the middle of winter. So on these cold days, and then also take gas at $14, $15, even more, and skyrocketing the basis up to even $30, $40 per MMBTU some days on the really cold winter days. So if you're out in New England, talk to your politicians about that. Monthly index price, again, we're big prices here in the winter, as always, much bigger than PGM because of that reason. It's basis gas prices, the price of gas is much higher over there. Sorry to go so quick through these. Let us know if you ever have any questions in these slides. You can put them in the question thing here. We can also just email or talk to and get in touch with our team here. We'd love to talk to our broker partners and customers. So natural gas, we've lowered this a little bit. These expectations here for 2030. That's basically I have a market insight on that. It's something that's not getting much news. There was a project that was canceled actually that was due to come online in 2029. So it's taking us off about 1.52 BCF, but we're still this is a real powerful slide to serve customers because it shows the growth in we're expecting here. So even the low case scenario, we're expecting close to a 15 BCF a day increase by 2030 in gas usage, and it's 22 or so for a medium case scenario. So powerful slide here to show. Next, we'll show some natural gas production slides here. Again, there can be big swings here. So there's much more discipline. They're not going to, it's $4 or so to really make profit. So with that, rig count came down with the prices. We expect production probably to increase back up to this 113, 114. I think that's more than the capacity we have right now for production for this time of year. It probably will keep up there now for the whole winter. But if we end up showing much more warmth here for the last 3 weeks of February and end of March, this production will drop down to probably 110, 111. Oh, sorry, the rig count there on the right. Yeah, you see that's kind of dropping a little bit, and that's more reaction. Remember, that's a rig count, about a week delay on that. So it's a rig count just showing off based off the prices that we're showing and kind of trending towards, which is lower than where most of these producing costs to produce. Okay, moving on, natural gas well production decline curve. We showed this before. This is a good curve to show customers as well, because this shows how when you do a well, the production just declines as you go through, and big decreases in that first 18 months, where it's almost cut almost in half in the first 18 to 20 months, definitely the first 2 years. So just show to the customers, just show we need to actually keep drilling and doing it because we need to keep doing it. If we had no drilling going on, new wells being drilled, we would be, instead of producing 113 BCF, we would be at around 90 in about a year or so. So, and that's without any new production. So we just need to drill just to keep up production, although add on. So box insights we had here. Yes, here we are. Energy transfer, pause LNG development, couple ships back to pipelines. They're basically seeing that. What we're seeing here a little bit is that potential glut if we have too much. So they're proposed roughly 2.3 megawatt per day export facility, targeting commercial ops in 2029. They paused it. So yeah, it's the 2-3 That's why we changed our adjustments for 2030. And I think we're going to start kind of seeing a little bit more of this. I don't think we're going to have a huge growth in new projects that are coming online already there until the market stabilizes and see where it's at. PGM emergency auction, seeing those policy shift. Yeah, federal states are pressuring PGM to run. The Trump administration for sure is trying a one-time emergency capacity auction at data center AI-driven load growth overwhelms supply. So the proposal would basically put these large loads and they sign them up with long-term contracts. So it's kind of like just a matching thing with newer existing generators. I mean, I got to be honest with you, this is already happening. So out there, these conversations, the Metas, the Googles, they're all Amazons, they're all the chat, the open AIs, they're all having conversations with generators and trying to get that going. They're cutting out the middleman, and you'll see that right here. Meta's 6.6 nuclear strategy. So with Meta, they're totally, they got deals announced recently as well for 6.6 gigawatts. Roughly 2.6 gigawatts is coming from existing nuclear plants. So that's not really increasing load or generation. And then another 4 gigawatts is tied to new advanced nuclear projects with TerraPower and Oklo. Those are kind of small nuclear reactors. The mix secures some long-term base load, basically claiming that, this was going to go offline if it wasn't for Meta saving the day. I think we all know that it wasn't going to go offline, but we'll give them the press release. Most of the new generation, the 4 gigawatts, it really won't be online for 7 to 10 years. There's barely any small nuclear reactors right now in existence in our country. They're still mostly in the test phase of these like 50 megawatt one kind of in the test phase. So yeah, they're not coming online in the next year or two. It'd be 7 to 10 years. So we're still just really what I'm trying to get to in this announcement was everybody kind of looked at this like, oh my gosh, look at this, saving the day, Meta's coming in, and all these new nuclear plants coming built. Yeah, it's great if it does come and it does get built, but it's not an immediate fix. It's going to be a 10-year fix. So we'll see on that. And yeah, lastly here, just gaining competitive edge with Box. We got weekly energy reports. I think we all see them, and we have blog posts we put out there, and we love to work with you guys and building out customer presentations. This Broker Online Exchange logo, that could be your logo for your company. And with that, I will now turn it over to Allie. And I'll catch my breath. Thanks, Allie.
Awesome. Thank you, Scott. Big moves happening in our market. So good to know what is happening and get a little bit of insight on what is going on. Our strategic solutions team and Broker Online Exchange, all of us truly are here to help, here to support you in those conversations. Just this morning, we've had a lot of traffic distributing some of this market information, whether that's information on the latest that we have for PJM capacity, or whether it's just making sense of some of these big market moves in that CMEC price. Shifting a little bit, we're going to talk about these headlines, and we're going to talk about customers' concerns about these headlines and the best way for you to position yourself as a consultant, hearing their concerns and focusing them on the future, helping them plan for the future that we're seeing, increased electrification, increased demand, increased AI. And truly, Scott, if we can go to the next page, really, a lot of customers are going to say, hey, I don't want to do this right now. And we totally understand. A lot of customers have been seeing their books and feeling that things in the energy industry that strain on the grid, that AI, big tech, data centers, all of this stuff is really taking a situation from medium or bad to worse. We're looking at aging infrastructure. We're looking at some power shortages locally. And so seeing all of these big forces that are continuing to grow, continuing to scale, can be really scary for customers. Your position as an advisor is to bring value. You can bring them so much value. You can help them kind of see through the noise. Customers are seeing those headlines, they're feeling really uncertain. You can be the person to say, look, I'm going to sit here right next to you and I'm going to help you make sense of all of the things that we're seeing. We're going to dig into these headlines a little bit. We're going to see what they're actually saying and the ways that we can integrate that information into the customer's energy plan. Because regardless of what's happening, whether we see kind of an optimistic future or a pessimistic future, we still have to plan for it. So let's dive in. of course, we're going to start with AI, something that we hear a lot, a concern that we are seeing. All of these quotes are from Reuters, but America's largest power grid, they're talking about PJM, is under strain as data centers and AI chatbots consume power faster than new plants can be built. That is true, and this is a concern. But what's actually happening is that AI workloads are really energy intense, and they are coming on. The demand for AI is definitely there. But what we're seeing is really a long-term demand. We are seeing that demand is highly concentrated in specific regions. Obviously, Ohio and Texas are really big with data centers, but the thing that we have to be conscious of, that I know that Scott has talked about on some of his market updates whenever we're looking at these demand forecasts and whenever we're looking at this volatility, is that utilities have the ability to manage their load through interconnection timing. We have a ton of generation, at least I know in Texas, and likely in other areas that is still waiting to connect to the grid to come online. We're still experiencing a little bit of a transmission shortage just in terms of that equipment. So whether your goal is to connect to the grid and push a large amount of power onto it, or connect to the grid and pull a large amount of power, the utility may or may not let you do that. And when the utility lets you do that is up to them, it's up to their planning. And so really this is not necessarily as scary a situation as what the headline might look like. What it can look like is that these big hyperscalers are going to come in and they're just going to take all the power, and everybody else may or may not have enough. We're just going to, all of the residences, we're just going to black those out so that we can reroute power to AI. And that's really just not what's happening. So whenever you're talking to your customers, help them understand that this is a regional challenge. This is regional infrastructure. This isn't a national power shortage, and it won't be. We can help you to kind of combat this fear. We can definitely help. Scott and I have both put together some market briefs specifically for that customer's region, whether it's their local utility, their township, their state, or the overall grid that is just responsible for managing them. We want to be really aware of what's happening in their region and make sure that the customer is aware of their local drivers in addition to all of the big moves that the market is making. And we want to take a look, and we really do want to dig into demand charges. We'll go through a little bit of that on the next slide too. Something that we hear a lot is that data centers are hurting local communities. We've seen lots of headlines, and pulled one, just a backlash in central Pennsylvania reflects a growing coalition of farmers, environmentalists, and homeowners who have united across partisan lines to resist data center expansion. This is something that everyone is pretty concerned about, especially in local communities, is just taking all of those resources. I talked about how people are a little bit worried that these big data centers and huge companies are going to move in, they're going to set up shop, and they're going to take all the power. They're also going to take all of the water, they're going to make a lot of noise. And yes, some of that is true. These guys do take up a lot of resources. But what's actually happening is that utilities are feeling the strain before the local communities actually are. So utilities will see this and they will phase this in. We do have increased demand from data centers, and because data centers and AI demand is for 24/7 load, this is a little bit different from a utility planning perspective. But utilities are working with these companies. We're seeing new regulations and some new moves, both from a federal perspective. All of the regional utilities are also looking at this. How can we get all of this built, and how can we get all of this paid for without compromising the power quality, without compromising environmental quality, without compromising any of our day-to-day lives? Power has for the longest time been an industry and a system that really runs in the background, right? You go into a room, you flip on the light, you expect the light to come on, and generally, unless you're in a blackout, it does. That will continue to happen. And Broker Online Exchange can help you prepare for those longer term planning conversations. Like Scott was talking about, some of this generation and these peak demand forecasts, we're talking 5 years out, 7 years out, 10 years out. So looking longer term, not looking at the next couple years and saying, oh man, I've got all of this stuff going on. Let's handle this near term. Let's handle the scary stuff that's affecting you right now, but let's make a plan for the future, because so that we're not in this situation again in 2030 or 2035. Another concern that we hear is that we're just running out of power. And yes, we are talking about some seeing some new wells not necessarily being drilled. We're talking about small nuclear reactors and their timelines. We're seeing headlines like rising power demand driven by data centers is shrinking U.S. electricity supplies and increasing the risk of energy shortages. Well, what's actually happening is, yes, national generation is continuing to grow. Transmission and interconnection lags are happening. So power isn't always available exactly when and where and when it's needed. But again, this is a planning conversation. These are potential future shortages. A lot of this stuff is not going to happen immediately. This isn't a tomorrow conversation. So let's handle what we can and make a plan for the future. So again, your response is, this is a delivery and timing issue. This isn't a shortage. Again, as long as this volatility is something that you plan for, that you understand, you're a lot more comfortable looking at these headlines and saying, okay, I understand that maybe we can have a headline that says energy shortages and scare everybody and get some clicks, get some traffic. But is that really what's happening? So here, really, really, truly, work with us, work with Box on your contract structure. We just went over with a large customer over in PJM. I've got a whole deck that reviews basically separating energy charges and treatment of energy charges away from some of those demand-based charges. Talking about demand-based charges, that's capacity, that's transmission, that's some of our very, very major ancillaries. And those are items that, for the most part, they are set and regulated in their values or in their calculations by the grid. Those are things that we can help you handle, help your customers handle, especially in the event that the customer is planning to make some moves over the next 5 to 10 years. The customer is looking to grow, if they're looking to move locations, if they're looking to expand their operation, if they're looking to go solar, to get a handle on all of their ESG and their carbon footprint, if they're looking at putting in any energy efficiency, a new HVAC system, new lighting, etc. All of that is things that can really materially influence the supply price that you pay throughout the term of your contract. We know how to optimize those costs, and we can help avoid that one-size-fits-all product and pricing, which in all likelihood is not going to be the best thing for your customers, especially when it comes to those larger customers. You really want to take the time, look at that specific customer. Let's work out treatment by component in a way that makes sense for them. Something else that we're hearing a lot is that the grid just can't catch up. Google has identified U.S. electrical transmission system as the biggest hurdle in powering its expanding data centers, which require significant electricity. As we know, wait times to connect new data centers to the grid can exceed a decade in some areas. So yes, like we talked about, transmission projects are long-term projects. They're going to take 7 to 15 years. And that may be once they're approved, because getting them drawn up and actually through the system to get approved is also a process that can get hung up and snagged all sorts of ways. So that's interconnection queues are overloaded. The problem isn't necessarily that we don't have investment capital or that people aren't looking at and very much paying attention to this issue. We do want to make our power grid bigger, more robust, more responsive, more reliable, but this is a slow system. Unfortunately, this is a big problem, and there's lots of stakeholders and specifically the public involved in this conversation. So we're going to see rapidly changing demand, but we are going to see slower moves on actually remedying this problem. So big problems, big moves, big changes for the future, but again, a slow moving system that may see some volatility before it can really decide on a plan. So like what Scott was talking about, our strategy here, partial hedges versus an all-in fixed, regular strategy check-ins are going to become more and more important. Partial hedges versus all-in fixed. He was talking about our managed hedge program where we're hedging customers and we're taking out basically tranches to create a dollar cost average that the customer eventually pays. We're taking a long view. We're executing during times when the market is historically very low or when we as energy experts believe that there are good buying opportunities. And we're protecting from that future risk by doing so. You really can only do this with customers if you are in regular conversation. This is not something where you can do a transaction with a customer and just set it and forget it. Really, truly, because fixed doesn't mean fixed, as you've heard us say on other webinars. Even if you are looking at a customer that wants to go long, really needs a true all-in budget number, you're going to want to tell them that the grid is changing, that we have a kind of we have shifting ground here, and that they're going to want to work with a partner so that if they were to get a pass-through, a cost adjustment, if they are to start seeing some things on their energy bill in the middle of their term and they're saying, well, wait a minute, I thought that I had a fixed all-in rate. I thought I was protected from increases. What's happening? That you have a trusted partner to be able to clarify some of that and give you some guidance as to what's a billing error and what may be something that actually happened in the market that is hitting everyone's bottom line. And then the next piece that we are hearing over and over, and last piece, is that all of this volatility, all of this load growth, all signs point to higher prices forever. What's actually happening is that, yes, we are having some real life constraints just due to it, and that is causing some volatility. These price outcomes will continue to depend on timing and structure. Scott and I tell customers all the time whenever we're in front of customers with the strategic solutions team that when you buy your energy, what time period you're purchasing for and how much energy you're buying matters so much more than doing a 3-year contract or boiling all of that down and just looking at one price and just saying, okay, well, I want to pay 10 cents. If you stick with us, if you have a long-term partner, really, truly, you're going to see the payoff with those customers in the next year for layered hedge customers. In the next, in the next 2 years, we've been signing a ton of customers. I've seen that, even in high markets where customers are saying, man, these prices are the highest that I have paid in as long as I can remember. And we're saying, I understand, but things could get worse. Those customers are so happy 2 years into a 4-year contract. And there's some great buying opportunities by taking a longer view. So talk to your customers. Constraints don't necessarily change the strategy, and they don't eliminate your options. You still have the option to fix float. You still have the option to go long instead of short. You can align your product with your specific risk tolerance, and we can show you how to do that. And again, it's important to have these conversations regularly to gauge performance and see if there's been any shifts in terms of the company position, in terms of how much risk they're willing to take. So really, decoding these headlines is about giving you the information that you need to have these conversations confidently, understand these risks, and help your customers not react to noise. We had a bunch of customers who came to us whenever the market really first started reacting to some weather risk just before the holiday, starting to see some increases, and really just after some of the dips that we saw in October, November, and everybody said, "Oh my gosh, well, pricing's up. What do? We have to move." price spikes will inspire urgency, but oftentimes whenever you're seeing a price spike, that is not the ideal time to transact. You can be such a valuable partner to your customer by saying, look, I understand this is, this is scary and this is noisy and you don't want to blow out your budget. This may not be the best time to make a transaction. This very well could be the top of the market. And if you wait with me, I'm gonna, I monitor this stuff every day. I work with industry professionals who can talk about this and who look at this, as often as absolutely as often as they can. So I'll tell you when it's go time, and be that trusted advisor for the customer, be the energy expert that can really truly help them decode what's important and what's really just noise. You can position yourself as a consultant, acknowledge their concern, reframe the issue for them, and tie it all back to fundamentals, which really aren't changing. Still paying attention to demand, supply, structure, and timing. We are helping to optimize customer costs today, and really truly the bigger piece of this is having a strategy for what comes next. Customers are getting caught short. A lot of, I think some of what I've read is that big moves are happening because some traders shorted the market. So it's good to have a plan. Hope is not a risk management strategy. We say it all the time. Fixed may not mean fixed. Lots of things can change throughout your contract terms, throughout your contract tenors. But Box and AdaptDirect are here to help you advisors every step of the way. So, Scott, do you have anything to add?
Well, first of all, I love your graphics.
Thank you. They're all AI. I don't know if you could tell.
Awesome, awesome, awesome. Yeah, I think really just want to emphasize that, and you kind of said, I'm going to sum it up a little bit, is it's really good to reframe. You're going to have a much more longevity, much more success as a broker consultant by reframing it from savings. I'm going to show you savings, because when you say that, they think they're going to save money in their bill, and we all see that electricity prices are rising. To I want to make sure, Mr. Customer, you are not overpaying for your electricity, number one. And number two is that you can budget accordingly and you're not going to have any surprises on your bill, and your contract is going to perform the way it is, or when you're fully transparent with how that contract performs, so you can plan your budget better. And Box is best equipped to really help out with all those things. We can look at the contracts, we can monitor the market, we can develop strategies, and we can, we also, with our big size, we have the ability to really bring the best price available to the customer out there with our huge presence in the market. So those are kind of the thoughts of really how to get across to customers. Now, savings is not going to get you. They're hearing that all the time, and they're knowing they're getting, and then they know no one can do that, right? Because you can be more thoughtful with it, like, hey, we're going to help make sure you don't overpay for your electricity. We're going to optimize your costs, and here's how we're going to do it. That really is how I would frame trying to close a customer.
Yeah, savings is really more of a, savings is really more of an efficiency conversation, just because you're actually saving the customer's consumption. We tell customers all the time, I can't, we may not be able to deliver savings. Costs have been going up. However, we can tell you that we are able to get the best rate on the market, the best fit energy supplier with a product that will perform well from a cost perspective, decoding all of that.
All right, awesome. And you can check us out all here on LinkedIn, especially LinkedIn. Check out all our feed on there and all the other sources here. And we also rebroadcast on YouTube. And PDF, a handout is right there in the deck. Please pull that out and we'll get it. And we'll also be putting that out there as well, but try to pull it now. Thank you guys. Look forward to catching up with everybody next month. And I believe we're going to do an AMA next month and ask anything. So any questions you have, send them off to your to your account executives or to us, and we'll try to get them into the AMA. So have a very productive, successful month.